Today we're going to talk about initial public offering litigation risks. This morning I read an interesting article from Kevin LaCroix, who has a daily D&O newsletter called the D&O Diary. I know, I can hear the chuckling in the back of the room already, making fun of my morning reading habits, but there's often great information here in this newsletter. In today's article, Kevin publishes a guest post from the Stanford Law School and the Stanford Securities Litigation Analytics Group on the topic of IPO litigation risks. That post can be found in its entirety over here. It was an interesting, deep, and analytic drive into IPO and securities class action litigation that I'm going to try to summarize here. In a nutshell, the authors have clearly demonstrated that there's an increase in litigation targeting IPOs. This is probably not a surprise for the variety of professionals that revolve around the IPO marketplace or those firms planning on going public. It also bears out the current market conditions and pricing for D&O insurance for those firms which are planning an IPO or who have recently gone through one. One of our underwriters described the current market conditions for small firm IPOs as the wild, wild west. Shrinking capacity for coverage and dramatic premium increases is making it very challenging for sure. Now, back to the study by Stanford. The approach taken by Stanford was to establish a direct link between IPOs and security class actions. The analysis differed from other studies which simply counted the number of IPOs and IPO-related lawsuits because there's generally a lag between the initial filing year and litigation, since there's a 3-year statute of limitation on these actions. The study also removed the distortion caused by parallel federal and state cases based on the same IPO and counted that incident as one case and not two. What they tried to do was attempt to provide evidence that was both analytic and free from distortions. From 2010 to 2019, 14% of all IPOs became the target of litigation. Between the years 2010 and 2016, the average ratio of litigation to IPO filings bounced between 10 and 16%. Then in 2017, that average moved to 18%, and they projected that the ratio will continue to increase into 2018 and in 2019 reaching 21%. The study needed to project their findings for 2018 and 19 because the full 3-year statute on those filings had not expired, so a trending was applied. Again, the study anticipates that 21% of all IPOs filed in 2019 will see litigation. That's pretty disturbing. The study then looked only at companies whose share price fell 20% or more within 3 years following their IPO for the 2010 to 2017 timeframe, since 2018 and 2019 IPOs have not matured to that point yet. What this analysis yielded was that of those IPOs with a 20% stock price drop, there was a dramatic increase in litigation since 2013. The percentage of firms facing litigation was about 14% in 2013, and that figure rose to 22% in 2017. Here's a summary of their findings. There has been a statistical increase in litigation risks associated with IPOs. The incidence of litigation for firms going public is substantially greater than the incidence of Section 10B litigation for more mature companies. Case outcomes are less favorable for defendants in IPO cases than Section 10B cases as well. IPO cases settle more often and are dismissed less often than Section 10B cases, and controlling for company size, they typically settle for larger amounts and larger percentages of plaintiffs' estimated damages. In sum, the litigation landscape for companies going public is more treacherous than it is for mature companies, and that situation appears to have only gotten worse in the past several years. Here's the bottom line. If you're moving towards going public, you need to speak with your insurance broker sooner rather than later. There are two forces at play which are very important to understand. The risks of D&O-related IPO lawsuits are increasing in both the incident rate and the settlement costs. On top of that, we're in the middle of a very hard D&O insurance marketplace. Premiums are increasing monthly and coverage is somewhat scarce. This means two things. First, you need to anticipate proper coverage levels to protect your firm's decision makers pre and post IPO. And second, you should be building the cost of that protection into your budgets and not be taken by surprise. Need on help raveling these issues? Not getting the guidance you want from your current broker? Feeling a little lost? If so, give me a call and let's chat. We work with a variety of firms across the US and in fact globally, helping them figure out the D&O insurance challenges, and I'd like to hear from you too. There's a link in the description box below where you can book a call on my calendar. Let's set up some time to chat. Thanks.